Hi, I'm Patu from FreeFinCal. In this video, let's take a look at Axis Focus 25 Fund. This is a focused fund as per the new SEBI categorization, which means that it must invest in 65% of Indian stocks at all times as per SEBI and must invest in a maximum of only 30 stocks. This fund will only invest as of now, as on date, in 25 stocks maximum. So this was launched in June mid 2012, and if you look at value research, this fund will be listed as a multi-cap fund. In fact, all focused funds are listed as multi-cap fund in value research, as far as I know. And I think that is wrong. You don't use value research to classify funds. Please recognize there's a difference between their classification and SEBI classification. Of course, there is not much difference between between a focus fund and a multi-cap fund in terms of asset allocation. That is the market cap wise asset allocation, but that's another matter. There are 21 such focus funds. We will talk about that later. So this fund is essentially a growth. It essentially picks growth stocks with high ROE, high ROCE. It will pick from the top 200. Typically, pick from the top 200 in terms of market capitalization. So 100 large cap plus 100 mid cap is its stock universe. Nifty 50 is the primary benchmark. BSE Nifty 200 or BSE 200 is the secondary benchmark. It doesn't matter. The problem is that it will pick many stocks from outside Nifty 50, therefore it will be more volatile typically, and also as a focused fund it will have higher concentration to each stock, so it will be generally more volatile. So if you look at the amount of domestic equities, that is the Indian equities it has held over time, and this is the red line is the Nifty evolution, and the blue line is the domestic equity level. It is not changed much with the Nifty 50, so there's not much of tactical asset allocation into play. It's gone up to 98% at one point, and then it's recently just dropped to about 86, and then it has gone up again. So it's very difficult to find any pattern from it. It generally stays fully invested into equities as a whole. And this is the historical market cap asset allocation. You can see that gradually over time the large cap allocation has kind of increased, and the mid cap allocation has come down. The orange is the cash holding, I think, and this has got about 7,800 crores now. Anand in Facebook group asked, Asana is a wealth asked, is this too high an AUM or is it okay? Motilal Oswal multi-cap 35, I think. That has got about 12,000 plus crores, and it has got only 26 stocks. So I think this fund can manage to manage at 25 stocks for some more time. Is not a problem for this fund. Of course, being associated with a bank will have some problems with it. I will talk about that. So I'll just push this a bit down. So this is the peer comparison. I've taken all the focused funds and then compared the 1, 3, 5, 7, 10, 15 year returns with Nifty 50 and Nifty 100. I've also added a rank to it. So this is, if you look at this, the fund has got, it has bet Nifty 50 and Nifty 100 over 7 years, 5 years, 3 years, and 1 year, and its rank is above median. So it's in the top half of the focused fund group. And if you look at every possible 3-year return, since the fund was only launched in 2012, there's not much of a history. So you have about 1,000 plus 3-year returns possible, and the blue line is the fund, and the Nifty 50 is the white line, and the blue line has generally stayed above the white line most of the time, which is quite alright. The only problem is if you look at the rolling risk, that is, if you look at over a given 3-year period, if you look at monthly returns and find out how much the monthly returns deviate from the average monthly return, the fund has got a higher volatility than the Nifty. This is natural for a focused fund. So the problem is, if the fund is going to be more volatile than the benchmark, then the level of outperformance expected in terms of return will be higher, because if the investor is going to take a higher risk, then they will demand a higher reward. Whether they get it or not is another matter, but they will demand it. So that's the kind of self-inflicted pressure for this kind of for a focused fund, and that can be a problem, especially with higher AUM. But as of now, I think it's okay. This is the 5-year data. There's not much of a 5-year data. There's only about 550 5-year data points. If you see the window here, it's the investment period of 5 years ended between June 2017 and August 2019. So there's a very short window. But during this short window, there's a very good consistent outperformance with respect to Nifty 50, which is very good. The other problem is like I said, the AUM. You can see here the blue line is the quarterly AUM growth and the quarterly NAV growth. So every quarter I've looked at the absolute change in the NAV. The NAV has not done anything spectacular. It goes up and down. It's been range bound. But if you notice, during the period the market had shot up, that is between August 2013 and December 2014, the AUM suddenly spiked and then it fell down when the market was not doing well, and then when the market zoomed up again, it spiked again, and then it fell down and the market is not doing well. This is the reason I made that video. You will never get rich if you do this. People are always investing after they see the markets right. This is stupidity, and especially being associated with the bank, this is a problem for any kind of mutual fund associated with the bank. They will start pushing these products when they see the market zoom up, and then the AUM will spike, and that will be a problem. So we'll have to keep an eye, but as of now, it's all right. So along with the quarterly AUM growth, which is this kind of a grayish line, I have shown the blue dots are the direct fund expense ratio. The orange dots are the regular plan expense ratio. You can see that when the AUM spiked up, then you can see that the direct plan has suddenly expense ratio has suddenly gone up, probably because most of this AUM is probably maybe direct plan. I don't know. Again, you can see that whenever the AUM spikes up, the fund house increases the expense ratio to ensure profits are okay. Also, when there's a small drop in AUM, then also they spike the expense ratio to maintain the profits. So this is a problem that SEBI has to handle, and it's very annoying. Finally, will this fund work for you? I don't have anything negative to say about this fund. It has done very well. There's no problem about it. AUM must be, as of now, there's no problem with AUM, but you must keep an eye on the AUM. It can become a large cap kind of fund with increasing AUM. They can increase the number of stocks to 30 and it still be focused fund. But if you are going to hold a focused fund in your portfolio, it must be significant. It must be in significant amounts to make a difference. But then you must balance it off with a low volatile kind of fund like Quantum or PPFAS or anything else. So keep that in mind, and it's a good fund. If you're holding this fund, there's no problem at all. You can continue holding it. It's a good performer. So that's what I wanted to say. I'll catch you again in the next video. Bye-bye.